game-changing discussions on the big ideas that shape our thinking. This is One2One.
Hello and welcome to One2One. I'm Tokunbo Shitta-Bey. Previously on the show, I had a discussion with Ike Chioke, Group Managing Director, Afrinvest West Africa Limited. Today is the concluding part of that very interesting conversation.
So, thinking about this infrastructure gap, you're also talking about huge projects, long-term projects. And I'd like to stay on the subject of the source of financing. We've talked already about recapitalization of commercial banks. We've gone to development finance. How about other sources of financing? The sovereign wealth fund, for example, pension. Can we raid the Piggy-Bank?
Yeah, I mean, the pension fund always looks attractive. You know, today we have over 23 trillion naira saved up, by, I think, just about 12 million contributors in the retirement savings scheme. But 12 trillion naira is a lot of cash when you look at it. But when you boil down and look at the detail, over 60% of that has been invested in government bonds. So it's like we've saved money and then we've loaned it back to the federal government of Nigeria. So they're holding about 14 trillion naira of our money. And the rest are allocated maybe equity market, maybe 10%, and some mutual funds. But going down to infrastructure directly, probably 1.5%. So just under 400 billion naira today. So that's not a whole lot. Much of it has gone into the Sukuk bonds, which have been used to build the roads, some roads across the country. Unfortunately, while I like the Sukuk bond structure, I don't like that they don't take a road and finish it from end to end. Often in a 100-kilometer stretch, there might be a Sukuk bond for 30 kilometers of it. So you're driving on this road, it's broken all over, you get on a piece of it, it's like beautiful. And then you drive for 30 kilometers, the money is finished.
Is that
and
why?
the portion that they allocated for that road has finished. And then you go back to this, bumpy road for the rest of your journey. But, you talked about a sovereign investment authority, NSIA. They too have the Nigerian Infrastructure Fund, NIF, part of their portfolio. It has over 1 trillion naira. So they actually have more money set aside for infrastructure than the pension industry. And I think we can do more. The challenge with the way pension funds have come in is that that actually was part of a retreat of the PENOPS, Association of Pension Fund Operators, recently.
Last week.
Some of the issues there are that you've got this pension money. You're living in an environment with high inflation. Today, inflation is mid-20s, was down from above 30% last year. Now, and yet you're taking the money and buying government bonds that are paying you 20%. So the majority of the money has gone into an investment that is actually yielding below infrastructure.
Counterintuitive.
Yes. So if I'm contributing at age 30, by the time I'm 60, that money is worthless. So yet, can the pension industry have the courage or have the structure to invest in areas of the economy that are growing? And in the same country, you've got a flutter wave emerge and get to become a unicorn. That is a company that's become $1 billion valuation. You've got people like MoneyPoint, $1 billion valuation. And if you think there are no opportunities, you see the telecom sector, there are many companies that have gone from zero to hero in a matter of 4, 5, under 10 years.
Same economy.
In the same economy. And the PFAs are somewhat risk averse because the rules say, you must have rating, you must have this, you must have audited accounts, you must have profit, without allowing them a bit of space to actually take part of the equity component of these companies as they arise. And that's, somewhat, again, the paradox of Nigeria. You see how we have oil underground, and we're struggling to refine it above ground, right? And so mercifully, Dangote has come to the rescue. But for generations, we all had problems getting petrol around the country. And when you think about the pension industry, our defined contribution system has created a pool of capital that's available. but the same capital is shy, is running away from the opportunity to invest in the real sector, the roads, the transport infrastructure, the logistics, the agriculture. Those are places that spur the economy to grow. And so you need just more creative minds to work together, government and the private sector, to actually find how to make this system work, rather than have all the cash on one side, and on the other hand, there's no money going to the right investments.
So Ike, that's really interesting. So what I'd like you to do is just walk through it for me, okay? I think what I'm sensing here is a huge desire to raid the Piggy-Bank, right? I'd like to know, if you were in charge of this, precisely how would you go about raiding that Piggy-Bank?
It's a question of the limits, your allocation limits. I think there's a structural issue in the way the pension industry is organized, where each pension fund operator, a PFA, is running its own investment advisory unit, rather than relying on experts. You understand? And so if Afrinvest were to send a proposal to say, this is how you can better manage your funds under management, they are not allowed to take that proposal and pay an advisory fee for good advice. Rather, they are forced to go in-house and develop that expertise. Given how difficult it is to build expertise in some of these complex areas, and you charge that to every PFA, it's going to take a long time to learn, and the goalpost continues to shift. So there can be some reorganization in terms of how the PFS themselves are organized, and that has to come from the leadership at the at PENCOM, the Pension Commission. On the other hand, there's also the issue of the allocations they have for different investments. Now they have sort of 70% allocation to FGN bonds. I dare say they should move that allocation to 40%. If you force them to move to 40% on federal government of Nigeria securities, then they have suddenly excess cash. You're talking easily 4 or 5 trillion that they have to figure out somewhere what to put in. Today, the allocation to state government bonds is only, what they've spent is only 10%, 2.5 trillion. Even the process of enabling a state government to tap onto pension funds is quite restricted. There are obviously issues that the state must be pension compliant. That means all their civil servants must be contributing to the system before they can come and raise money. But they can also come and raise money in a listed instrument that's registered with the SEC that allows the PFS to buy that. And I think that the allocation for municipal bonds should increase, because development is happening at the level of the citizens, which the states are much closer to. And when you can do that for the states, you can actually do that for local governments, big local governments. A TIOSA local government is strong enough in a Lagos state to be able to issue a bond and build an extra bridge between Victoria Island and Ikoyi or the mainland. So when I worked in New York, sometimes it's just a municipal bond. City of New York is issuing. And I do a $50 billion bond, just in a blink of an eye, it's done. So we need to sort of think about this money is not just meant to be looked at. This money is not just meant to collect interest for some people. This money is to be used to work the economy and grow it and expand the opportunity for our kids. Because, with a population base of, 65, 70% under 30,
and galloping inflation.
Yes, we need to create opportunity for them. Because otherwise, we continue to have all these issues of insecurity, people walking across Nigeria through the Sahara Desert to get to Europe, all sorts of, social vices that we're dealing with, so.
Yes.
Yeah.
And these vices obviously come out of frustration and the poor nation.
And the lack of opportunity.
Lack of opportunities.
Yeah. But if you're investing in the infrastructure of the economy, you're creating opportunities everywhere, opening up the countryside, securing citizens' and lives and livelihoods, and investing in agriculture. Then you wouldn't have this lopsided situation. There's a bountiful harvest in Kogi or Benue State, and then there's nothing on the south, that sort of thing.
Absolutely. So, of course, I mean, what we agree is that, infrastructure is a huge part of this nation building. We've been talking about how we fund, the infrastructure. But, just going back, there's been a huge push in this country going back decades, thinking about how we reinvigorate, rehabilitate the dilapidated infrastructure. One of the things that was done, there was a massive wave of privatization. And then, of course, we had public-private partnerships. Can you talk to me about how well you feel we've done in this area? What sort of impact has
the PPPs on one hand, and then you have privatizations on the other. They all sort of seem to be pointing in the same direction. But there's this agency, the Infrastructure Concession and Regulatory Commission, ICRC, that manages PPPs, public-private partnerships, and then actually focusing on infrastructure. And then the privatizations have been organized through the Bureau of Public Enterprises. We did a majority of privatizations during Obasanjo's era as president. Quite over 100 and maybe 40 companies were privatized.
Across various sectors.
Across various sectors. Yeah. The result is sort of mixed. Yeah. I'll probably use the good, the bad, and the ugly. There are some very good examples of privatized entities. Even the UBA we know today was privatized. Once upon a time, it was owned by the government. I think Hakeem Bello Osage was a successful entrepreneur that bought it before selling to Tony Elumelu. But the privatizations done by President Jonathan, which was mostly the power sector, that was a problem.
That was tough.
Yeah, because people then thought it was like getting a telecoms license, or back in the days when they issued GSM licenses and the likes of MTN, Airtel, Glo emerged. So every Tom, Dick, and Harry and their grandmother came to get a disco license, and these are people that didn't even understand the basis of financial structuring, and some of them went and borrowed money from Nigerian banks in naira, in dollars, to buy assets that are giving naira income.
And still did not invest in infrastructure.
And even have enough money to reinvest in the assets. You buy distribution companies. There were 12 distribution companies. They shut in for discos across the country. And they're not very good examples of many which have had the investment dollars come into it. Quite a few have had to be, taken over, So the example of some of those latter-day privatizations have not worked. I do think that the mistake could have been that we should have done more effort in pre-screening who qualifies and who doesn't. But unfortunately, some of these decisions get politicized. And therefore, people then say, oh no, I must allow this guy to come in. And then obviously, problems emerge. But, looking beyond, like I said, I can see that the government has new and increased plans on how to tackle specific sectors. MOFI, Ministry of Finance Incorporated, I don't know if you saw that, recently launched the MOFI Real Estate Investment Fund. It's a 1 trillion naira fund. The first tranche of 250 billion naira has been raised. And essentially, there's cash available to give Nigerians mortgages at single-digit interest rates to buy affordable homes. So that structure is in place, and that is something that will be coming out in the next few weeks. The president will probably soon do a big launch around it. MOFI has another sort of similar fund that is going to be looking at agriculture and other sectors of the economy in a way that you structure the funding, and the funding is available. Now you just have to then marry that with the opportunity that is on the ground, and in a way that there's returnable capital for the fund providers, as well as impact and transformation on the ground. Yeah. And we could do more of that. We have, for example, the highway HDMI is a shortened form. It sounds like the cable you use in one of your...
That is an HDMI, yeah.
Yes. But essentially, we've packaged about 10 major highways and sold them on to handed them on to private sector investors who are now going to run those roads and toll them. Because no point having a highway that is broken, a distance that should have taken 45 minutes, 1 hour, you're trying to do it in 3 to 4 hours, because there are many problems on the highway. And there are investors who can bring the funds, fix the roads, and and so long as government is there to protect their interest, they can then toll it. Yeah. Unfortunately, the challenge is that, again, we set bad precedents. There was a tolled road in Lagos, if you remember, Ozumba Mbadiwe. Yes. Beautiful road. First toll was built, second toll had been constructed, and there's supposed to be a third toll. And that would have been a beautiful 6-lane highway all the way to Ajah. And at a point, it became political. Yes. And the government of the day decided to take the road back. Unfortunately, the quality of the road is no longer as it could have been or as it used to be. So I have to say that the political leaders must have the discipline to stick to contracts and agreements. If you've signed on to something, you certainly can find it within your capacity to make sure, so long as it's the right thing to do, to stick to it. Because after a while, you then realize that it makes more sense to do more and replicate that model. And that's how we connect the system and hopefully begin to look like a mini China, which is where we should be going to in terms of infrastructure. Yeah.
I mean, the principle of tolling roads is not novel at all. Remember the M6 to Birmingham was tolled for several years. Yeah, but I'd like us to talk about examples. We've talked about the fact that, of course, yes, the infrastructure is the issue. We need to bridge that gap. It requires funding. Okay, we've talked about a number of different sources. We've discussed the reasons why. I mean, in some of these cases, the money's not getting through. But there are gold standard examples, different parts of the world. Do you want to talk to me a little bit about that? Specifically about PPP and privatization, where it's worked?
Well, countries that worked, India is a good example, Mexico, South Africa. Even.
What have they done differently in Mexico, for example?
I think basically understanding the levels of protection the private sector needs. So I want to attract funding, and the private sector is not just looking at jokes and say across, oh no, I know you, I just want to protect you. But the contacts you have in England, for example, could enable you to bring £500 million to invest in infrastructure. And so you represent a whole body of potential investors. And I think that often leadership tends to be somewhat myopic because they look at the investor just from the lens of, oh, this guy's from this state and this guy's from this religion. And a lot of effort is made, oh, let's go and campaign and talk to foreign investors. But foreign investors actually have access to information. Information moves at the speed of light today. So they're listening to what you're doing to their local investors and how you're maltreating them. The minute we start setting standards of equity and fairness in the deals that we're structuring locally and making sure that we don't create bad and obnoxious precedents of maybe taking somebody's business away from them, no matter how they came about it, we can get back closer, the situation, for example, what the Indians did in terms of the kind of funding, they put together. It's also interesting, to make sure that you have this protection fund. Okay, we are going to give you this road. You can toll it only so much, but we know that the monies may not be enough. Government will then top you up to make sure you get an economic number so that your return is at the level it should be. And the funding for that top-up should be done in an independent manner. So the guy is not looking for the money or coming to any ministry to wait for his cash to come in. So therefore, the system continues to move. Otherwise, once the system shuts down, and then you've lost faith, you've lost confidence, it's difficult to restart.
And that is the key, isn't it?
Indeed.
We're getting the right environment domestically, so we send the right signals.
We have enough precedents. We actually have, and I wouldn't be advocating for a fact-finding mission of some Senate committee to go to any country. There's enough evidence of what to do right in Nigeria. You can just sit down and if you need to do more, Google it or use ChatGPT to even recreate what it should be in Nigeria, and AI will spit out the structure you need.
There you go.
There you
Absolutely. Go. I'd like to return to a very important point you made earlier.
Okay.
You met your good wife along this journey,
yes.
right in the middle of structuring a deal.
Yes,
actually and
yeah.
you returned together. I love the way it's brought a smile to your face.
Okay.
You came back to Abuja together and started, got
Okay.
on with them. How important? Of course, I appear to be asking a very obvious question. But really, you speak of her in the sense in which you speak of a partner on this journey. Do you want to talk to me a little bit about that? Okay,
so at the time, this was 2000, at the turn of the century, and we are worried that earlier that year with Y2K, that computers are going to crash, planes are going to fall out of the sky because 1999, the clocks were set to stop at 1999. Nobody knew what's going to come after that. Anyway, so in 2000, I was advising. I was working at Salomon Smith Barney in London, and we had a mandate. It was an IFC-supported mandate to advise the government of Kenya on the privatization of Telecom Kenya. And we had then organized what they call a beauty contest, created an RFP. First of all, it was what they call an expression of interest. If you're interested, you want to buy this company, express your interest. Then we shortlisted a few people, then invited those ones to do a more comprehensive submission in the RFP process, request for proposal. After that, we further shortlisted, and we then came to 3 potential people that should go and do due diligence on the company Telecom Kenya, because you needed to be very strict with your standards so you don't have all sorts of charlatans coming to disturb management while they're running the telephone company. So we then had this bidders conference. I think it was on the 6th of December in 2000. I had invited the 3 companies. I was working as a vice president then. I'd flown into London that morning with my associate, a young man, from Greece, called Miltos. So he's white, I'm Nigerian. And we then had all these bidders. If I recall, there was Telkom Malaysia, there was Orascom Telecom, and then there was a group called Mount Kenya Communications. So we had people from around the world, the Malaysians, a couple of Malaysians came in with their team. They had some local Kenyans working with them. Orascom Telecom, some Egyptians came in. They had some people from Kenya, across Africa working with them. And then Mount Kenya Communications Consortium was actually being promoted by a chap that Nigerians got to know the next year, but his name is Strive Masiwa. He's the one that brought Econet to Nigeria. So Mount Kenya, started by Strive, Econet Wireless, and they had hired the international consulting arm of the Dutch telephone company called KPN. So a team from KPN International Consultancy, headed by a certain Yvonne Tevierik.
We're very conveniently present.
We're present. Yes. And so in this big boardroom, there are 24 men and only 1 woman. It was Yvonne. And of course, most men tend to wear dark suits and a white shirt, and she happened to be wearing an orange skirt suit and orange shoes and a nice bag to match. So she stood out, and she has blonde hair, green eyes, so you couldn't look across the room without stopping for a moment. And that's how we met. But obviously at that time, I was selling and she was buying, and obviously it would be a conflict of interest to obviously have anything more than a business relationship. So we kept it platonic. The deal went for several months, and ultimately the Kenyan government, actually Mount Kenya was qualified as a preferred bidder, but the Kenyan government refused to sell and said we're going to shut down the transaction. And so we went our different ways. Then, because Yvonne's unit in KPN is involved in international telephone consultancy, she was contacted by the unit of that Bode Akindele set up, Investors International London Limited, when they were looking at NITEL, Nigerian Telecommunications, in 2001, a year after. And so she then began to provide them telecom advisory. But then she noted I didn't have any investment banking advisory. And she said, look, you needed an investment banker because I can give you all the telecom advisory, but someone needs to put it together in a financial model, run the numbers and do a discounted valuation and give you the number on how much you need to bid.
I know someone.
Yes, I know someone. I said, he's in London. And then she came to London, I think July, August of 2001, and mentioned the deal to me. I said, oh, yes, I'd be interested. And that's how I got involved in the NITEL transaction. And ultimately, we worked together with IILL. And now we are working on the same side of the deal. There was no conflict of interest. Relationship blossomed. And they say the rest is history.
The rest is history.
So we're blessed with 3 girls. Well, they're not girls, they're young women now. You know, Zara is 22 this year. Oh, it's already 22. Sorry, Ngozi is 20, and Anouk is 15. So they're all over the world.
What a lovely story.
Yeah.
Amazing.
Thank you.
So, Ike, you've had quite an interesting journey. So what next for Afrinvest? Where do you see the company, say, in 5 years?
In 5 years' time, Afrinvest will be one of the biggest financial institutions in Nigeria. I say that not without having the structure in place. If you asked me 10 years ago whether that would have been possible, I would say no. But today, with the convergence of finance and technology, the line is already blurred between what is a big commercial bank and what is a small microfinance bank, you see, because technology has allowed a bank like Kuda, which has a unit microfinance license. Unit means you have one location in some remote part of Nigeria, but because you're connected to the central bank window, you can spend the advertising dollars and bring in the customers. With technology, they can seamlessly use their bank account anywhere in Nigeria. That's Kuda on one hand, probably is worth far more than some of the regional banks or even some of the medium-sized commercial banks that have a requirement to put up 200 billion naira in capital. So that convergence is already happening. You already have seen some of the bigger banks now trying to come back down to build fintech platforms. But it's difficult to change an old
model.
Yeah, model. So we are set in that journey. About 3 years ago, we launched our first fintech business, Optimus by Afrinvest. Today, it has about 250,000 customers quietly, and it's just an investment and savings app. We've also recently acquired a microfinance bank. So we're in a business of tooling that license to fit with the fintech business. And in the next few months, we'll be launching that. And once it's out there, we want to take the niche as one of perhaps the leading bank that can offer you outstanding investments and savings while able to do all your banking business as normal. And I think that would be something that will appeal to Nigerians.
Absolutely. And I completely agree. How very visionary, yet immediately practical.
Yes.
Ike Chioke, it has been an immense pleasure.
Thank you, Toks.
Thank you very, very much
Thank you for having me.
joining us on One2One. Thank you.